and hopefully the website comes like a line at the end.
Roger
That's
that.
white link. Actually, the thumbnail is so fire. Jeez.
Yep. Good looks. Good looks. Yep.
Sucks that the market's closed tomorrow.
Huh? Yeah. Yep.
All right, YouTube. Good morning, good afternoon, whatever the time is where you're tuning in from. What's up? How you doing? Welcome back to another Q&A. This time it's not just myself. We got Marcelo, we got Tim, and we have a newcomer here, Triad Trading. For those of you guys who might not know him, Tom. How you doing? So in this one, yeah, good to see you here, man. So in this one, we'll be doing some Q&As, some question and answers, and we're gonna have a good time. It's also gonna be a bit of an open floor conversation, along with some new announcements coming to you guys. So I'll give the guys a chance just to say what's up, and then we'll go from there. Marcelo, take it away, brother.
Hi, friends. My name is Marcelo, and I'm happy to answer any questions. We have some very cool updates coming soon, so stick until the end of this video.
Hey, Tim here. Just here to provide value, and haven't done a Q&A in a while, so absolutely fire questions away.
I'm the new guy, Triad Trading, and super excited to answer some questions today.
Yes. So for those of you tuning in on YouTube, you guys can, of course, feel free to send in any questions. And we'll also check through our MMU chat here to see what the team might have left throughout the week for us. As you guys know, for the students, they have a designated section in the chat room where they can ask questions, and we'll always come back either during the day or sometimes here Sundays and respond to everything. For those of you tuning in, also be sure to hit that thumbs up. Rob, Mohammed, all of you guys tuning in on YouTube, be sure to hit that thumbs up. We already have 52 people in the building, and of course, fire away those questions, Chad, Parjan. So in the MMU chat here, we're seeing a few. There's not that many. Well, actually, we're seeing a few. Let's pull that up, and we'll get the road going here. So let's see. Can you give a complete breakdown of the 1 minute pullback with archive example? I used the breakout or bailout approach. Thanks. So Marcelo, do you want to take this one?
Yeah, definitely. Well, I don't think we're gonna pull up an archive right here now, but I guess we can all say, all the four of us, how we specifically go about managing 1 minute pullbacks, and what is your favorite entry? Because as you probably already know, 1 minute pullbacks has a bunch of entries. For me, my favorite entry in the 1 minute pullback is essentially trying to catch that falling knife. When you have two to three red candles of pullback, I usually take a look at what the low of that candle is, and I try to accumulate size as that bottoming wick starts to create. If it doesn't bounce right away, as you were saying, breakout or bailout, I get out. If it keeps dipping, maybe I get in a little lower. But the idea is to be able to catch and be part of that bottoming wick, so that when the first green starts to curl, you start selling and you start, catching the profits from it. That's the way I look at them, at least.
I'll add one thing. I mean, on those first pullbacks is like it's never an exact science. So that's why we like to kind of like recycle to find that dip. Like maybe you get in too early, you take a small loss, but then you finally do find that low. You can hold it a little bit longer, wait till it resolves above the previous high. You get that basically extension over the highs of intraday highs or pre-market highs, whatever you're trading, and that's nice as well. It's tough to have an exact answer to that question. It's kind of just depends on the price action, price of the stock, how it's moving, spreads, all that type of stuff. So
Me, I like the kind of like the baby pullback after a fresh breakout when you got like the new high of day volume, kind of fresh volume coming in after a nice breakout, taking the first kind of depends on the price of the stock, but maybe first 5 or 10 cent dip, and then trying to time the low of the candle, and then as the candle formation starts to form that bottom and tail, adding into the position for the next leg higher.
Yeah. So before we continue the questions, I do want to ask Tim something here pretty quickly. Tim, man, we had the last day trader meetup. What happened, brother? What happened to you coming to New York, getting that, the chance to go on the floor at the exchange? How come you weren't able to make that trip, man? A lot of people missed you.
but yeah, trust me, I didn't want to miss it, but it just happened to be that I've got, a couple other trips that are, I'll probably be out of the office here pretty soon. And, back to back trips, stuff like that, kind of for me messes with me being fully locked in. And I know the boys are going back to New York again. I know I'll be on the floor. So it's really just like a rain check for me on that one. It was tough though. It was tough. So I won't be missing the next one, and anything going forward, I'll be there for sure.
Yeah, man, sometimes that's how it is, duty calls, and opportunity costs. But like you said, we'll be back on the floor soon. And for those of you tuning in, we do have some big things planned. And so, uh, we spoke a lot of times in the past about doing an in-person meetup, and we just decided to go all out. So, at some point before this year is over, there will be a relentless, merciless seminar. So you guys can stay tuned for that, and it will be in New York City. So Tim will get his chance to shine on the floor. uh Marcelo, do you want to take the next question in the chat, brother?
Um, guys, would you share your Thinkorswim layout in Discord to download, please? Yeah, we already share it. Feel free to send us any of us a personal DM, and we're happy to help you with that layout. I always say away from 1 minute time frame. Well, we are 1 minute time frame is essentially all we use because we're micro scalpers, right? And anything over that is probably way too slow for a strategy. What's the other question? I'm seeing no questions.
There's a few inside of like the MMU chat.
Oh, I was still getting the YouTube chat. In this
I'm gonna give Tom access so he can see as well.
When MMU resort coming? Yeah, our next meetup is gonna be Mexico. MMU HQ is gonna be Cancun.
If y'all want my layout, just message me. I don't know exactly how to do it, but if somebody can just shoot me how to send the layout, I don't mind doing that either. Same with my hotkeys, I do that all the time.
Yeah,
Yeah, I
it's
have a
pretty
question here.
straightforward. You can there's like a link at the very top. What was it? Let me see. I can pull up my Thinkorswim here. There's a link at the top. Once you hit setup, the gear icon, it's right there. Yeah.
Good to know.
Hey guys, could you go over the fundamental aspects of what you look for when choosing a small cap stock? Do you care about the news? Do you look for SEC filings? How do you prevent secondary offerings? Essentially, do we take a look at any fundamentals at all, or do we 100% base our training on technical analysis?
I guess I can start on this one. It kind of depends. Like sometimes we have waves of stocks with no news. We're always looking for, floats that are for us probably under 10 million, under 1 million is probably the best, 1 to 5 million, anything less than that's great as well. You know, if it has news, sometimes that's great, but sometimes it doesn't have to, right? It could be some sort of sector. You know, we had something where we saw a lot of AI type stocks. If they had that in the news, that was good for a little bit. But then you'll see a lot of runners off of basically like thin air, right? Or it'll just be like daily setups or certain stuff like that. So in terms of the real fundamentals, we know all these companies aren't really great. We're just getting in and out quick. We're not holding anything overnight or anything like that. But yeah, low float. Looking for a lot high relative volume. We're looking for, you know, definitely something that has potential to go up, you know, hundreds of percents in a day, and a history of that. You know, look on the daily to see if the daily's clean or, you know, what type of dilution they have. You can look at that on dilution tracker, um, and FinViz for float and stuff like that.
Yeah, but essentially, to summarize your question, it would be 90% technical analysis, and the 10% fundamental we do is, as Tim was saying, it's just looking at the float, looking at the shares outstanding, and maybe reading the headline of what is the news that is causing that big move in the morning. But we are, honestly, technical traders, price action traders.
In terms of trying to get away from getting caught in a secondary offering, that's kind of tough to do. A lot of times, though, they'll do those like midday or kind of at times where a lot of us don't trade. But it depends. You know, if you see on the dilution that there's a bunch, we don't really trade a lot different. If we do see that, we just kind of hope to not get caught. And for the most part, I don't think you will, you know, as long as you're holding, you know, not longer than like a couple minutes or something.
Okay.
Have a question. I have a question here that I think Triad told me a good story back in our trip, so maybe you are going to be suited for this question. So, hello, I'm a struggling trader. I'm struggling with fear of getting into trades because the moment I get got into a loser and the moment the trade goes against me, I have trouble cutting them. I freeze up. I feel like I'm a deer in the headlights. When I catch a winner that bounce instantly, I do well. But when the trade goes against me right away, he's having trouble freezing and not knowing what to do. What are you guys' thoughts on losing trades
Yeah.
and how to manage them?
I'll go first with this one. The number one thing when it comes to cutting a loser quickly, I believe, is first accepting the risk before you enter into the trade. So with every position you take on, you should have a target, and some form of expectation of the stock going in your favor, right? Because that's why we're buying the stock anyways, right? For it to make some sort of a move. So you must have some sort of expectation or target. And then the other side of that is, if this does not work out, if my hypothesis does not work out, if this trade goes against me, what is my risk? This is something that should be predetermined every time before you hit the buy button. That way, when the stock comes down, it's never a surprise for you. And also, something that I like to do that's a bit of a little trick, if you want to say, to help me out, is I assume the risk to the extreme. Now, will the stock fail to the extreme every single time you take a trade? Of course not. That's not realistic. But I do it because in the event that a trade that I'm looking, just let's say paint a picture here, I'm looking for a 15-cent move and I'm looking to risk just 5 cents, but it flushes down 80 cents. It's to the extreme, but I kind of already have that in my mind. So if it does happen, although not expected, I can still cut that trade quickly and not become emotionally fueled. So, that's one quick tip. Maybe try out, anybody else can jump in there.
It sounds like you're attached because of you were saying that you're in a cash account and you're running out of cash. That's definitely a problem with, since this strategy, hyper scalping, you need to be taking a lot of orders, taking a lot of trades, and allowing the law statistics to kind of work out in your favor. But if you have a cash account, you can only trade, let's say, 5 trades on a decent amount of size. You're not going to be able to allow the law of statistics kind of work in your favor, even if it's a great day with good momentum. So I would say, if you, whatever amount of cash you have in your account, probably sizing down to where you can take at least 20 or 30 trades. That way, if there's a loser, you have no problem cutting it because you know that you can trade that same stock again or wait for the next setup without worrying about running out of trades or running out of cash.
Yeah, I want to add something else on top of that. Remember, when you're now starting out as well, right? Or even if you've been around and you're not consistently doing well, the aim shouldn't really be about money. Like, it shouldn't be you trying to make money. It should be you more so trying to learn the process, right? Following a strategy that works, and you know, being disciplined towards the fundamentals of what makes that strategy successful. So again, when it does come to that aspect of managing risk, understanding where it makes sense for you to be in terms of positioning yourself in the trade for that, winning trade, that winning move, and where you want to cut it so it doesn't harm you. And so again, as Triad mentioned there, giving yourself as many attempts as possible, assuming that, let's say you're following like our style of hyper scalping hundreds of trades, you want to be able to be there and be able to, have access to the momentum. So, even if it means one share, 5 shares, whatever that might mean, so you have the longevity throughout the entire day to trade consistently, right? That's what you need. Because again, don't worry about trying to make money. It's about proving that you can be correct with the strategy, and then at that point you can increase your risk.
Question for Tim. Tim, what was the big thing that clicked for you with your trading this past year to start killing it on trading? Was there anything specific that you switched in yourself, or was it something else?
There was a couple things. So before I met up with the team here and some of the guys in San Diego, it was just pre-market trading. So I had my other business to where that took up the majority of my day. I traded maybe 30 minutes into the bell. So I didn't even really get to take advantage of the real momentum that comes in. I would just be kind of looking at P&Ls on Discord and getting FOMO when I was at work. So when I went on the trip, it gave me 5 days to trade throughout the whole day, just like, all my buddies, all these guys are, soon to be buddies at that point. But all these guys are doing. So I ended up switching to market orders. That's, a big thing that I didn't realize there was any difference really. I thought it would be the same from pre-market to, intraday, that there wouldn't really be a difference there. But on Thinkorswim, you can get midpoint fills, stuff like that. And the quickness, not having to worry about my offset. If it goes past my offset, then I have to cancel my order and send it again. That cost me so much money pre-market and intraday. But I looked at my statistics, and where I made most of the money was in that first 30 minutes. So whenever, we were there, I would just kind of take advantage of those market orders and kind of the quickness of it. So I'd take a dip, and normally I'd be looking to get filled on the ask. And if it came down on me at all, I'd just bail and maybe not get back in just because of how the spread was. But I kind of could feel that being able to, as we say, like kind of recycle shares, it was really nice. And it just kind of started flowing, and that also, I also need to say, like, I stopped trading really poorly on the backside. I started really reading price action well. Just a lot of things that kind of all collectively happened at the same time. And from that point on, it's just been parabolic, really.
Symbolic, but indeed.
There's one here in Discord I can go through. It says, "Hey RT/Marcelo, have you guys ever reviewed your recording and become impressed on how you execute and manage a trade? Wow, I really dialed in on that entry." Or, "Wow, I actually took that trade." I guess it's a sign of growth, but at the same time having to be careful and not become overconfident. Thoughts? Yeah, definitely. Sometimes I'll review, and there'll be a few trades that I see that I really kind of feel proud of, give myself a bit of pat on the back. And actually, during Marcelo's Q&A, I was also watching one of his archive, and it was plus $6,000, biggest dip and rip ever. I was watching that entry, and even though it wasn't my own personal trading, watching that, Marcelo going in and sizing up, I think maybe 4 or 6,000 shares. Sweet dip, and I know Tim caught a few of these, I think, too, recently. Sweet dip, and then an enormous bounce. The stock just giving some crazy follow through. So I think definitely, man, it's always good to feel proud about the work that you're doing. So ultimately, if you watch it back and you feel good, you definitely give yourself a little bit of a clap. But as you mentioned, you don't want to get overconfident. So
Yeah, and the key with reviewing back your archives is not really to see which are your biggest trades, but more where you're screwing up and where is that section in the market that you can sharpen and get better at? Especially when you're a beginner trader, you want to be looking at which are the trades that are losing me the most money and which are the trades that are making me money. I think that's the value of archives. I still review my own trading, as Artis was saying, but it's more of trying to find flaws. Seeing those big winners is awesome because sometimes when you're trading, you're so in the zone that you don't even remember what you do. You see some P&L start stack up. Sometimes you kind of like forget how much shares you bought. Like for example, I would find myself clicking the buy button a few times when I'm in the zone, not even realizing how many shares that is. I just know that the setup looks good, and I just go for a few extra clicks. And then if it's a winner, it's a big winner, and if it's a loser, it's a big loser. So it's always surprising to see what I did in the moment. But I think the key with the archives is trying to find the flaws in the strategy so you can remove them. At least that's the way I see the archives.
Oh, before we move on, quickly, guys, we have 81 people watching, but only 23 likes. You got 4 absolute legends right in front of you right now. Guys, let's hit that thumbs up. We got to get up there to at least 70 likes. I mean, for guys like Tim, Tom, you know what I'm saying? We got to get up there to at least 70 likes. Let's hit that thumbs up. Even if you're a new viewer, consider subscribing to the channel as well. And yeah, we can continue on. Tom, do you want to take the next question on YouTube?
Let's take a look here.
It's a good question, especially for all of us that we all use Dash Trader Pro. Since charge route integration is coming here this summer, what are we going to do when DAS is no longer synchronized with our broker? So how are we going to adapt for that? I know that RT is safe because he still uses the thinkorswim buttons and thinkorswim hotkeys. For me and Tim, I think we are, we rely a bunch on the DAS hotkeys and stuff like that. So what are we going to do when that becomes a thing?
First off, we've got till, May to absolutely hammer the markets. I mean, so it's pedal to the metal. And then, if DAS isn't working day one, from the transition, it's going to maybe be a little bit of a, little bit different, but I think it'll be there. I know hundreds of traders that use DAS with huge accounts on TD. They're not going to lose those customers. I can almost guarantee you of that. So I'm not as worried, to be honest. I think that it may just take a couple weeks, maybe a month, but by the end of the year, DAS will work with Schwab. I don't want to put money on it, but I'm pretty certain that that's going to happen. So I'm not that worried.
Yeah.
Yeah, I think it'll integrate
enough hotkeys to make it work. Sorry, go ahead.
Yeah.
I was just gonna say, yeah, I really think that DAS is gonna integrate with Schwab. That's gonna be, a continuous thing because, or else, DAS would lose so much revenue.
Maybe thinkorswim might just make their own hotkeys as intuitive as DAS. If they
have better hotkeys. Yeah.
I wouldn't mind paying for that, man. If that's what they do,
Yeah. I wouldn't.
Anybody if you're watching live already been transitioned to charge Schwab from TV? Just wondering.
I know right now you can't get DAS on Schwab if you've already transitioned, or if you have an account that you're creating with Schwab, it's not there right now. But I know that all the big traders are getting transitioned at the same time. So that could potentially be when they're going to allow the gateway. So customer service, I hear so many things on customer service from different reps that say different things. So it's hard to really know, but I wouldn't worry too much about that. I just worry about trading well. And if that's a problem, then there's a lot of people that are going to have to kind of do a little bit of adjusting. So
yeah, absolutely. And I was profitable on just using the swim ladder too. So at the end of the day, if I have to get rid of DAS, I'll go back to the ladder, and I'm sure I can just pivot right back and be fine. I mean, the TOS ladder is workable if you need to use that. And Crispy, look at Crispy, he's killing it on just the ladder.
I mean, you don't really need the ladder though, because I watch at the DAS level 2, but I execute through thinkorswim, so you don't really need the ladder. You can still utilize the level 2 in that way.
Yeah, hopefully the level 2 will still work as well, and we can look at the level 2 and then just trade off of thinkorswim like what RT does already. So
the level 2 is gonna work for sure, because Yeah, it might just not be connected.
Yeah. So that'll help.
Anyways, I do see this question, and I do think it's a great question. Hey team, what do you do when you buy the dip but you get a high entry? Is that an automatic sell, or do you wait for any signals that tell you to sell? How do you manage risk in this situation? Usually for me, I do give it a chance. I will give it a second or two to see if it can bounce back up, because if it's a really hot stock, even if you get a high entry, if you're still buying in the right area, you'll still see some profits, or even at minimum just break even trade if it does bounce up from around that area that you got your fill. But I'm definitely a lot more faster to cut the loss if I don't immediately see the resolution or the bounce because of the high entry. But I'm not immediately selling because of the fill. If that makes sense.
I think it depends how ridiculous the fill is. If it's a dip or like a 1 minute pullback, that's why I was saying I might give it some room to still play out. But if it's like a dip and rip, a high day breakout, something, one of those riskier setups, I think if I get a bad fill in those scenarios, like you're buying at the highest point in the chart, then I would just cut it immediately and be like, oh, fumble the trade, get out of there. If it's a dip though, or a pullback, a safer setup, I wouldn't care much about the fill. I would give it a chance though.
Agree.
Do you guys use Stream Deck? Oh, go ahead. Go ahead.
Oh no, I was just gonna say I think it's more like if you're buying and you get a high fill, but it's like right off of a $half, whole dollar, stuff like that, you give it a little bit more time. But if I'm buying like an extended sell off, like a panic flush, and it's like almost like a millisecond, if I don't immediately see green on the tape, those bids could just drop another 20 cents. So usually I try to just bail, get a midpoint fill, and then just get back in lower.
Yeah, there's someone asking if we use Stream Deck, and then there's also another question: do you guys trade off of multiple accounts? So Stream Deck, no. Right now we're just on a Discord call. You guys know me; I'm pretty rough around the edges. I don't do all the fancy stuff. I'm just here to, talk with the boys. That's it. Have a good Q&A. In terms of multiple accounts, I have 3 brokerage accounts. I have E-Trade Pro, and I also have Guardian along with Thinkorswim. Just in case if I ever need a backup, or if, one goes down, I can use the level 2 and the other, things like that. But I think it's always good if you can. But of course, some brokers do require 25,000 or 30,000, which can be pretty expensive. So there's that.
I have 3 accounts as well. So one a Guardian, maybe some short side trading soon for me, and then TD,
Nice.
and then I have like it's not a trading account, but it's like a retirement style account with another brokerage. So
Yeah, like that's a good point that Tim just mentioned there. I believe it was Friday or Thursday in the live stream I mentioned on some stocks, the backside is somewhat, you know, we can't use the word easy because easy doesn't exist in the stock market. Everything is hard, but we can say it's somewhat more obvious to recognize sometimes, right? You guys get what I'm trying to say, right? Wording, whatever, but it could be good for us to be able to go short in those areas, right? Recognizing an early backside reversal candle, and we know how these stocks will go up nicely, and then the rest of the day just sell off like crazy. So that's definitely a good point right there from Tim, man, for sure.
it's in the works. We'll get it.
February P&Ls. You
I'm
guys
just curious
want to
for
answer
Tim,
that?
like, would you do like a hyper scalping short strategy, or would you just buy in and then hold all day?
Okay, I'll just go ahead and tell everybody for sure. I mean, so I've been kind of formulating this for a little while. I don't know, like in my head, I guess at least, but I'm trying to locate shares of like that stock every morning that usually it's either up a couple 100% to where it has a good bit of range to go down. And I'm just trying to locate shares pre-market. And then during the day, when we see like that kill candle, like RT's saying, or something that's like a clear backside indicator, trying to remember, because I still don't even think about it in the moment right now. Remember, I have the shares, and like right now, I'm just doing like 100 shares, maybe 500, nothing crazy. trying to take a short and look for like an end of day style cover. I see a lot of like systematic style shorts that are covering pretty much end of day or, after like a huge sell off, which, I mean, I would probably just be looking for those end of day covers, but it's something that works. Maybe next 6 to 8 months, I'll be able to have some confidence to size into some sort of backside setups.
Nice, nice.
Yeah.
And I'll be letting everybody know along the way. So we're all going to help each other out. So.
Yeah, if I ever short, it would be definitely that style. I don't see myself microscoping to the short side because I was screwed up. Sorry, microscoping to the long side. Definitely be kind of like those bigger fades. Because as long by traders, we already know how backside looks. So it only makes sense to start capitalizing on that.
You know what? I disagree a little bit. Like, I definitely wouldn't mind a longer hold if it's like just super obvious. But right now, I do go short on Thinkorswim when shares are available in areas where there's obvious
never.
resistance. It's a few trades. It's a few trades when there's because shares are never available, and they are right. There's some stocks that's easy to borrow, or I'm on a hard to borrow list, so sometimes there's shares. But let's say we're hitting a level. Let's just paint the picture. 550. It's just not going. It's not going. I'll go short right there, and it flushes down 15 cents, and I take the quick scalp. You know. But definitely backside bigger picture though. There's a lot of gains to be made there. So there's a question coming in that asks for the P&Ls for February, and there's also someone asking if a particular ticker symbol is going to go up for highs. This is a good point for us to that's actually crispy. Never mind. Jeez. I was going to say the disclaimer that we can't one, we don't give, and this is just good in general for us, right? To just let the people know, to be transparent, that we don't give any sort of like financial advice in that way. As we know, trading is very difficult. It takes months, more commonly years to learn. And what we're doing is looking for, short-term gains in the sense of, hey, can this thing go up 10, 15 cents over the next couple of seconds, right? Rather than any sort of long-term, hey, maybe over the next hour or a few days, this thing will go up. So it's a little bit more difficult for us, which is why we hyper scalp. But yeah, I didn't realize that was from Crispy Trades. How you doing? Of course, you can feel free to join the call anytime, brother.
Crispy Trades in the house.
Sir.
Thinking about short selling again, especially you started dabbling into it. Do you feel like you've mastered the long side so much that the only other way for you to start making even more money is to start adding those strategies into your arsenal? Because the reason why I haven't started shorting, because I feel like there's still so much more money that can be made up to the long side. Like, wouldn't your efforts would be better invested into trying to dig into more long strategies and how you can use bigger size, or like, I don't know, hold for a little longer or maximize the strategy rather than taking some short stabs?
Yeah, I mean, I think that's probably one of the reasons why I haven't really gone a whole lot of time or put a whole lot of time into it. Because for the most part, like, it's just not, the potential for sure is on the long side. But I just keep seeing, and especially with like how the orders, on TD and all that type of stuff, it's like, well, if I have another broker and I can just maybe have something that's on the side, like if I'm going to be trading all day, let's say, or at least be watching the markets all day, it's at least something that I can just get reps in. So I don't know. I think work on
Right.
both of them, definitely favor the long side, but there's definitely down the road, I think there's some good potential with just like a lot of these guys that kind of just size in at those key spots, when it's super extended and we're kind of still scalping it. Well, if I can take a short with a pretty decent, wider risk, I don't know. There's definitely pros and cons to that, because then it's like, well, maybe I'm not scalping it as well because I'm sitting
Like
there
a
trying
more
to short it.
passive day trade.
So I don't know,
Yeah,
dude. It's
that's
tough.
fine.
That's why it's like, anything goes right now. Even large caps, maybe. I'll maybe short Nvidia. I'm cool with that too.
Sure. Yo, Pastor, the MU website is back up. If you wanna pull it up and give Triad his proper introduction.
Yes. So Triad, as for those of you guys who might not know, right? His name is also Tom. Triad has been inside, yeah, there's the guy right there, right? Triad has been inside of the Relentless trading community, I think at this point for years, and he has now officially joined the team, right? He has officially joined the team. Triad is now going to be posting archives. Here you guys can see him right there. Triad Trading, ladies and gentlemen, Tom. So, some people might say, hey, Relentless, we do have the perspective of yourself, Marcelo, Tim. Guys, sometimes when it comes to learning and growing, the person who is just right, a few steps above you might just be the best way to go. You guys are seeing the gains from myself, Tim, and Marcelo. They're like ballooning like crazy. And it starts to get to a point where if you're someone who's very new, who's now starting, you start to look at, myself making 70,000 a month. And it's like, is this even real? Is it possible? And I remember feeling that way when I first started looking at some of the big time YouTubers out there, right? So, Triad, a couple $100 every day, $500 days, $1,000 days, it's definitely very relatable, and the archives are there. And not only that, he uses the charting primarily, so you guys can definitely check him out. And we do have coupon code Triad in honor of him joining. Coupon code Triad for 40% off, ladies and gentlemen. So
That's actually a great point that you touched there. I just now in this live stream, I've been seeing a lot of comments of people struggling with level 2 and then not being able to master it. Triad here is probably the only trader that is in this video call that is able to day trade small cap momentum floats by literally staring at the price action of the candles. So he obviously has a level 2 pulled up, but his trading style is based primarily on the 1 minute candle. How is it behaving? He's looking at the dips and how much the candle is pulling back from highs and stuff like that. So definitely another point of view for this micro scalping strategy. And as RT was saying, I remember when I was a beginning trader, I used to be a big fan of Ross, but it almost got to the point like, what am I gonna do with somebody making $500,000 a day, 100 grand a day? It's like, how is that even relatable to what I'm trying to do, right? And try it's a consistent trader, but he's not making 6-figure months like Tim, right? He's making a living off of trading. He's been consistent for a few years now, but he's making numbers that is probably more relatable for you guys. So hopefully his point of view helps some of you guys turn the corner as well.
let's lock
Yeah,
in
and
on.
sometimes it's that different. Oh, sorry to cut you off. Sometimes it's that different perspective helps too. Like some people just learn better from certain individuals. I don't know, like some people just resonate with certain things better, and that's why it's nice to have a nice more chart based, and we're more just price action, reading straight level 2, and just being able to kind of pick and choose like what you like out of each person's style. That's kind of how I feel like formulated how I trade now.
Yeah, that's a good point right there, man. I was gonna say, let's also dial in on some of these MMU questions here in the chat. Let's see. I think there's a few statements. Let's see if we have another question coming down. Hey team, what do you do when you buy the dip but get... Oh, okay, I think this one was already covered. We forgot the check mark. Any discussions about a renewal discount for MMU students coming up at the end of the year subscription? Yeah, we can definitely work on something. For those of you guys who are longtime members looking to renew, you can definitely DM us. But we definitely, again, coupon code Triad is out there for 40% off. So you guys can utilize that. And you can also, what you can do, because I believe the last coupon that we did, it was for a one-time use. What you can do is cancel your membership and then, resubscribe again with the new coupon. So you're not charged full price. Okay, coming back to the YouTube side of things. Will gold members get access to Triad's video? Of course you guys will. You guys know the deal. Great job. Okay, we now have 91 people with 50 likes. Guys, be sure to hit that thumbs up if you're now tuning in. And if you're a new viewer, consider subscribing to the channel. We'll also post the links for Marcelo's, Tim's, and Triad's channel here. I'll work on that. There's something else I wanted to say, but I'm forgetting. So I'll let one of the other guys jump in and take another question.
If your stock has shown to be tricky with traps and sudden reversals, would you stay away from the stock or still consider it for a quick scalp?
I mean, it depends if it's still in like a bullish momentum, right? So a lot of times we will see these stocks kind of be a little bit more grindy. And I think it was like DBGI earlier this year where it had these huge flushes, like dollar a share, people would get killed. But if you bought that dip and you actually just held on to it, it would curl all the way back through those highs, kind of do the same grindy action, and then later another big red candle. So it depends, right? Like if a stock's just kind of going sideways and maybe just grinding up, certain ways that stocks will grind up, maybe if they have a bigger float, you can kind of, I guess for us, we can kind of tell that they're more risky for that. But on the smaller ones that we trade every day, it's kind of like once you see that and what happens based off of that, if it happens again, then you're like, well, maybe it'll happen the third time. I mean, nothing's an exact science, but history usually rhymes. It may not repeat itself, but it definitely rhymes.
Ooh, that's a good saying.
It is very poetic.
Like this question here. Do you guys have and follow a max loss rule? Yeah, I do follow a max loss rule. Right now, my max loss is $1,000. So if I'm ever down $1,000, I just completely stop trading from there and just come back the next day, because I want to eliminate the possibility of me going full tilt on emotions and capitulating from 1K in the red to 2K in the red to 5K in the red to 10K in the red, and wiping out weeks or months of gains, or even more than that. And so that's just the max loss rule that I think everyone should have, because not every day for every single strategy, not every day you're gonna have an edge, just through sheer statistics. So just maybe a handful of days every year, just no matter what you do, you're gonna have a red day for X amount of days out of the year. So for those days, you have to recognize that before you capitulate deep in the red. If you can nip that in the bud before you can even get to max loss, and maybe just get scratch day or small red, having that max loss rule will prevent you from, let's say, if you start to go tilt and you get to the max loss, you can have the discipline. Hopefully, you'd have the discipline to kind of walk away at that point before you go even beyond that. Do you guys what's your max loss on the day, guys?
I guess I'll go next. For me, nowadays, it's a little bit more mental max loss than a number. Just like kind of what Triad was saying, it's like if I see myself going full tilt and I can feel that, I really try to like recognize that and adapt my style that day to kind of how the day is, and maybe try to make it back. But there's certain days that I've had that it just seems like I can do literally nothing works, and at a certain point I'm on tilt and I just throw in the towel. So I'd say a number, $5,000 is usually when I'm really hurt and I'm like, okay, we got to stop this. But it's it could be 1,000, but my mental, I might want to walk away. I mean, there was a couple days ago where I almost walked away down 1,500, and then we finally got a good move and made like 10 grand, which is awesome. But there's days I've walked away and missed those. So there's a lot of emotional stuff in this game for sure. You got to take into account.
I think as a rule of thumb, though, for beginners, you guys won't be able to have the intuition Tim and Triad have to be able to make that judgment of, do I still feel like calm and collected to keep on trading versus I don't know if I'm revenge trading anymore. I don't know if I'm making excuses to stay trading because I have FOMO. You guys won't be able to make that judgment. So I think for beginners, it's good to just pick a number and walk away when that number is hit, regardless of whatever you're feeling, or regardless if you feel like that's the right decision or not. But for me, I'm kind of like in the same boat as Tim. Now, as a consistent profitable trader, my max loss is not a specific number. I would say on a slower day, you definitely want to tighten it up. But in general, I think I'm around a $5,000 red day as well. You just don't need to lose that much to know that something's not right. just don't need to lose 5 grand for you to understand, like, okay, my setups are not up to there. I'm not out to today. The stocks that we're trading are not, they're not synchronizing with my style of trading. So the max loss is essentially telling you, like, hey, like, whatever you're doing today is not working. Stop, walk away, and try again tomorrow. Yeah, around 5,000, 3,000 maybe.
Yeah. I'm pretty much in line with Marcelo and Tim, Triad as well on that. So I'm not gonna regurgitate. To add some sort of value to the conversation, I'll say to help prevent yourself from getting from max loss. In the first place, there's a few things, a few tricks that I use. One, no matter how great the market has been and is, I start the first minute of the open with smaller share size always. The other guys might not do this, but for me personally, it really helps me when it comes to the chaos of what sometimes goes on in that minute, because there can be some strong opportunities, but I've come to peace with myself at not maximizing on that opening surge every time, because the days where it goes wrong, it's awful, right? I'm in very heavy, stock is down 80 cents, I'm in 5,000 shares. Hello, 4K red day to start the day, right? Like, so I told myself, okay, like 1,000 shares, if I do lose a thousand on the first move down, I still can recover from where I am in my experience, right? But other than that, I do like to size down throughout the day if I'm inaccurate. If I'm trading something and I think I'm in a rhythm, but then I start losing, I'll size down and try to like regain connection with the stock and then size back up. And that's on the fly. Like I can have 4 big trades, but if I lose, it's like okay, time to get back in in a good groove.
To end on that real quick, I think as a beginner trader, if you're not profitable, stick with what Triad said. Just pick a number. And I've done that too many times where I went past my max loss and wiped out a month's gains or weeks of gains. And I could have stopped down whatever it was. I think at that point, probably like $100 or 200. And, I'm down 800, and that will ruin your day, ruin your week. And it's better to kind of just step back, look at your recording, see what you did wrong, and do better tomorrow.
Yeah. A good rule of thumb is for the beginner traders is going to be two times your average green day. And essentially, you don't want to be on every red day. You don't want to be hitting your max loss every day. The idea is that's like a security measure. It's not like every single red day has to be
Like,
2x your average green day. Essentially, you want to get it to like 0.5. Your red day is like 0.5 to 0.25 of your average green day. That's just, yeah, of course, recognizing, are you mentally green or mentally red?
That's a great point, and I want to add that real quick. A max loss, you hitting a max loss, that shouldn't be your normal red day. Yes, that should be a catastrophic red day. So don't think like if you choose a number and let's say for you it's $100, don't feel like okay, I have $100 to play with today before I stop trading. No, like that, those $100 should be like the worst case scenario. And if there's nothing to trade, but you're red 50, don't be like okay, I have 50 more to risk. I'm gonna keep trading until I'm down 100. That's just hitting your max loss is the worst case scenario. Your average red days should be like half of that or like a quarter of that. When does Savvy post his trading videos? Savvy doesn't post his trading videos on the Mercer's Markets University yet. He's open to it. We'll be more than happy to have him.
I can do one real quick. Do red days or smaller green days spill over into your personal lives, and how do you manage? That's a good question. I guess I can start. It definitely does for me on red days. When I know that I've messed up, like if it's something where it's maybe more of how the day was, not me making a whole lot of mistakes. I'm not as mad at myself, but yeah, I mean, that's something I'm still actively working on. I think the one thing I do now is like every time I do have a red day, the one thing I like about it, even though I hate it, is that I take a step back and look at like, my P&L from the last couple of years or like whatever, and like just look big picture. And then I'm like, okay, this is just it'll be like one little drop in my big curve. So it's like, it's not the end of the world. And yeah, but I'm still trying to get better at that.
Here, I'll go next.
What do we do? Go ahead.
Yeah, I want to answer this one too. For me, I'm usually pretty encouraged and inspired every time I have a red day. It's not right away. It might take a few hours or for me to at least do the recap for that therapy. But I think the way how it shows and reflects on the outside, it's like I'll be like a crazy person, right? In the sense, like I'll be in the gym, and out of nowhere I'll just start like clapping my hands, and I'll shout out woo, like let's go tomorrow, like. But in my head it's like in my head it's like I'm ready for tomorrow. I'm excited to go trade again, to have another chance. But if to everybody else around me, it's like, what just happened to this guy? He was just walking normally to the bathroom, and he just started going crazy. That does happen to me. Sometimes I'm in the car driving and I start fist bumping and clapping as well. But it's just the excitement. Other than that, I do want to touch on something Tim just mentioned there, which is that sometimes he looks back for the bigger picture. That's pretty good. And even if you're someone who is not profitable and you don't have any gains to look back on, I think it's always good to reflect on yourself and, remember why it is that you're trading, right? Because ultimately trading is a business, and we're all here for some sort of reason, whether it's to, financial freedom, to make extra cash, like whatever it is. You have to fall back on yourself, and you ask yourself the questions: who am I, and what is my purpose here? And okay, I'm going through adversity now, but if I continue to work, I can potentially find that progress to become better. And so, fall back on who you are. And I'm hoping all of you out there are determined hard workers, people who are capable of consistency, who are capable of putting up that fight, right, and not allowing yourself to lose the battle when it comes to emotions and these type of things. But yeah, Marcelo, you can head on to that question.
Yeah, and as RT was saying, you don't have to be a profitable trader for you to be able to take a step back and try to reflect and find something good from your simulator metrics or from your small size metrics. When I was not profitable, I remember I had a stretch of 3 green months of profitability that every time I had a big red day, I would go back to those 3 months and see like, okay, this I was that trader. I was able to capture profits for 3 months in a row. What was I doing then? What was the setups that I was trading? What was the strategies? What was my mindset back then? So if you have a stretch, even if it's not consistent stretch, even if you have a stretch of a few green trades, look back to those trades and see. Try to pick yourself up from those trades and see what was I doing then? What was I doing then that I can start doing now? But yeah, we've all been through the trenches, and that bumming out after a red day, I don't think is ever gonna go away, even after we become profitable. So getting used to it.
I'm seeing Crispy's message here that said to add him. Crispy, if you're still around, let us know, brother. We can add you in.
Beaver Green.
I just want to add on that last question. Just I'm not gonna obviously repeat. I would say the exact same thing that you guys would said, but one thing I want to add though is just make sure that you're not beating yourself up too much to where it gets unhealthy. Because I've had problems with that when I was like just starting, because we didn't have you didn't have a history of success, so you were just kind of beating your head against the wall, just being like, oh my god, why can't I get this? I see everyone else succeeding, why can't I do it? What am I doing wrong? And it gets so frustrating. But yeah, you definitely have to have a healthy mindset to where you can detach from it, and just get your mind off of it when when you don't need to be focused on it. Don't let it beat yourself up for like a whole weekend. Don't let it ruin your weekend. Don't let it ruin a week. You definitely need to be able to practice like detachment from trading at certain times. Like there's a time and space to focus on trading and to think about trading, but on the weekend, most of the time, you should be detaching and mentally taking a break from that.
Yeah, that is a great point, man, because I remember back in the days, I wouldn't even want the weekend. I would want it to just be Monday so that I can try to trade again. And what made me stop doing this is that I would wait for Monday throughout the entire weekend, and guess what? Monday comes, I'm red again. And I have to realize, okay, this is not healthy for me. This is not making sense. Let me take the time to relax. I'm not gonna carry this baggage from the office into my personal life. Like, go out there. It's the weekend. Go out, enjoy yourself, have fun. Okay, you study up at the end, right? You do whatever work you have to do, but again, it's just very healthy to enjoy that time off. You know, the extra days that we'll get on the holidays, the Mondays, whatever it might be. It's always great to have that time off. Use it to relax, rest, study up, come back fresh.
Yeah, don't let it ruin experiences with family or events or stuff like that. Because sometimes that's only a one-time thing in your life, and you don't want trading to kind of occupy your mind in those great moments.
All right, so we have a little record here to break, and let's see who's going to be the first out of all the four of us who breaks it. So apparently, Laptop Legend had 158 green days in a row. RT had 184. So Evergreen is asking Tim, are you gunning for that 185 green streak?
185 days in a row.
Yeah.
Well, I don't know if y'all have ever heard of this dude named Ed Bari. He's a IU guy. He had like a year, I think, of no red days. He had an interview. I don't want to butcher what was in the interview, but I know that he's like, I've never seen anything like it. So that dude takes the cake. I'm not really gunning for anything, to be honest, with kind of how we trade. We're gonna have red days, but how some of these penny guys trade, it's like it's just literally small. Like they just, I don't know, it's different, but I don't see them having any red days or even close to it. Like intraday drawdowns don't even really happen for the most part with some of these guys. They're like, they're the algos, really.
Yeah, they're like BMAC, right?
Yeah, yeah. It's kind of like BMAC. They trade the pennies and they just
That
are
printer never
super
fails.
consistent. Yeah, super disciplined.
Another thing is too is like for me, I actually don't set those type of goals. Back when I was in the simulator, I set a goal of like a daily average and a monthly average, a monthly goal rather, and I found that it just put too much pressure on what I was doing. So ultimately for me, the only goal that I have is to show up and trade to the best of my abilities. And over time, can I improve and see progress? Whether I'm red, on any given day, that's not the concern. The main concern is, did I trade this day under the confines of risk management that I have for myself? Because a red day can be a successful day too. So, if the red days happen and I'm trading well and I'm following my rules, it's not a problem. But, definitely if I go haywire and do something like crazy out of character, then it's a real issue. And even then, it allows for an adjustment and an improvement. But other than that, I don't really set those type of expectations. But if it happens naturally, then hey, I'll take it every time of the week, every day of the year.
Absolutely.
I have a question. There's a student here asking, what will be the parameters you must hit before you go from a simulator into trading with real money? In my eyes, usually what I suggest and also what I did for myself was I had to see at least 3 months of consistent trading with my small account or either my simulating trading before I started sizing up. For you guys, what was that? How do you guys did it? How you went from small size to big size? What type of countries? What type of metrics that you had to see before so you were able to take that jump?
I guess I'll go. I was in the simulator with Warrior Trading for 6 months, and I think it was like 3 months of consistently being profitable before I switched off of that. And I had an account at TradeStation. Actually, was the first broker that I opened up, and that's when I just kind of started taking advantage of free commissions and pre-market and just kind of doing what I was doing in the simulator. And started with like 100 shares and just really slowly every week, maybe up it by 50 shares or maybe up it by 100 if I was green that week. But that was tough. It really was. Like if you go up too fast on your share size, the emotional aspect of it can definitely be like it. That's more than anything for sure in terms of sizing up.
For me, I did not do a simulator, believe it or not. I was one of those guys who just did one share. I did one share for 2 years. 2 years I did, well, between 1 and 10 shares. I did that for 2 years. And It's crazy. It's crazy that I had the discipline just to do that, but just not worrying about the money. I just thought long term that eventually I'll be sizing up. But the metric that I wanted to hit was, can I have consistently profitable months? Can I be green at the end of the month? And it really took me 2 years of 1 to 10 shares to really start making like $30, $50 a month. And then from there, I just went to 100 shares and then, slowly sizing up from there. But I never did the simulator. I just felt like that the fills, as long as I knew how to buy and sell the stock, how to do my studies in the simulator, look at the level 2 and stuff like that, kind of know the buttons and stuff. I felt like the fills were not as realistic. And I definitely have observed some people who went from simulator to live trading and not getting as great success because of the fact that they're saying like, oh my God, now I'm getting filled on the ask. This is not how I was used to trading in the sim, and I'm getting filled on the bid coming out. This is not how I'm used to trading on the sim. And it starts to kind of eat away at their confidence of what they were doing in the sim. But that was just my experience.
That's fair. I actually had the opposite experience happen to me. I felt like the feels I was getting in the simulator. I was trading the Dash Trader Pro simulator. I don't know how the Thinkorswim simulator was, but I felt like my simulator feels were worse. And when I went to real account, it was the other way around. It was like I was playing hard mode all along. Now I'm like, I get that TD price improvement, and I was like, damn, fine.
It's
But yeah, to each their own.
For me, it's kind of in the middle because I was using TD Ameritrade Simulator back in the days when it was actually real time and live, and the fills were very, very realistic back then. So when I transitioned to my live account, it was like a smooth transaction. But in terms of the parameters before going live, definitely at least a few months, 3 to 6 months of consistency. When I became green in the simulator, back then, let's say it like this: I was green gross, and back then commissions were still a thing, right? And I was leaning on the side of taking a lot of trades, and so my next step was, hey, okay, you were red, 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 red. How do you go now from green gross to green net after the commissions? And literally the next month, commissions was abolished. Commissions was gone, and so I was like, all right, I'm gonna keep embracing this. And so between, I think that was like October 2019, maybe in November, I embraced the hyper scalping style all the way till May. I had my account ready, May 1st, 2020. So you can say it was that like 7 months of me still being in the sim. Some of it was that I needed the cash, but again, not bad practicing and learning more.
I'll say as well, when I first started I was at Sure Trader and F1 Trade, and then I was at CMEG. I've been all around. But I remember looking at my stats and seeing that without the brutal commissions on all of those brokers, I had some sort of edge, and I was like, okay, maybe once I get enough money saved up, I'll be able to, and like what RT was saying, it took me a while to save up, but once I did, it worked out well for sure.
I have a question for you guys. Saving towards BDT. Me and FT always get this question like, "Oh, I'm a profitable trader. Can you loan me 25 grand so that I can start trading over BDT?" How was your guys' approach towards saving 25 grand? Because none of us here were handed down 25,000. So how do you get from no BDT account to a BDT account? You want to share your little story, your saving story?
Um, I would say you got to do everything you can. I mean, since I was young, I've kind of tried to start businesses, affiliate marketing. I actually sold books on Amazon FBA for a while. Just going to like thrift stores and literally finding books that you could scan the barcode on, and they would pop up for like $80 or $100, like textbooks, whatever. And that's how I made like my first like 8 to 10 grand. And then I started a pressure washing, soft washing business because I live in the South. We have a lot of mildew stuff. Stuff gets real dirty here just because of how humid it is and whatnot. So I started out with a buddy that I grew up with, and that's kind of just grinded that out while I was still learning trading the whole time, and just slowly stacking that. And I think having a business helps because there's a lot of write-offs and whatnot. And as you're starting, you can, there's ways that you can write off pretty much all of your revenue for your first couple years of business because there's a lot of expenses, and you can still be able to make some money off of that and also do it on the side and have another job. That's the beautiful part about, having a business that's like a service-based business that you can do kind of, you know, maybe just 1 or 2 days a week, and then you have your other job or whatnot. But don't get me wrong, it's a grind. So you kind of got to try to balance the two and do your best. But that's the one thing I hate is that there's such a big barrier to entry, to day trade. Maybe it'll change one day.
Yeah, for me, just what I did was trading my cash account, my small cash account in the morning, and then afternoons and evenings I was waiting tables and restaurant style work, pretty much 60-hour weeks. I was picking up everyone's shift. I was hustling, and then I was saving money, focused on like living on bare minimum, not like going out and partying, not drinking and going out to bars and clubs and all that kind of stuff. Living on rice and chicken and pasta, like just cheap stuff. Not going too crazy. But yeah, I just worked until I hit that 25K, and then I gave myself that time in the morning. Since you work in the restaurants, it's usually afternoon and evening. In the morning, I was using that time to trade and study. So I was pretty much between that and trading. I was working like, if you count trading as work, it was like 16 hours, 18 hours a day. And then I would just be sleeping for like 6 or 7 hours.
Yeah, you want to go next, Pastor?
Sure. I'll start off by saying this is not financial advice. What I did, it's called credit card arbitrage. And this is the process of converting credit into cash and literally starting a business. So I took on an immense amount of debt. Out of my $27,500 starting balance, I believe like 25,000 of it was all borrowed money. And at the time there was like this promotion for like 12%, what was it, 0% interest for about 12 months. So I did go that route, and it was extremely risky, but as someone who was getting into a business and where I was in my personal life at that time, someone who didn't have any children, who didn't have to, bear the burden of taking care of the household, and all these different factors, I thought it was best to go that route, and I was fortunate to have enough. I was fortunate to have decent credit, and I was fortunate to also have a sibling who kind of was in line with what I was doing, who also helped me to get this money, because I didn't have access to that kind of credit at the time. And so, he, without even thinking twice, is like, here's 17 grand, here you go. Like, we literally took on this risk together, and it's like a pretty crazy thing because, if it didn't work, I would have had to pay back the money. And if I blew up, it would have been even that much worse, because then I would have been out and then have to owe the money, right? So what I did was, hey, max loss of like 2K. If I lose 2K off the top, then that's it. You're kind of done. But so I borrowed. At the time I was working too. I was doing a lot of you guys know I was working at Amazon, delivery station, um, sorting packages. Also doing 10-hour shifts, 6 days a week, so 60 hours of just sorting packages. I'd say that stuff is like madness, but sometimes you got to do what you got to do to be able to get to the prize. So in my eyes, trading is a business. Sometimes you have to borrow money, but again, this is not financial advice. Everybody's life is different. Some people you might not be able to take on the risk just simply because of your situation and the circumstances. So luckily I had that support from the siblings, and you know if you ask me now, I'd say it for me, it was the right decision.
My story, to keep it short, is a hybrid of what these guys are sharing. I, like everybody else, put my head down and started working every day, probably like 15-hour shifts as well. The thing I chose to do was to paint houses because I didn't have experience back then. And I knew that manual and physical labor was the one that was going to pay me the most without experience. So I used to paint houses, and I also was a receptionist at a hotel. I used to sit at the lobby, check people in and out, and stuff like that. Which is probably a tip for you guys. If you are going into this journey of saving a PDT, find a useless, easy job like that one. Because what I was doing in that job was studying my trading. I was in my laptop. I was looking at my recording. I was going through books. You know, this is a job that was making me money to save for PDT. And at the same time, I was using it. Instead of wasting my time doing something useless, I was learning to trade, getting better at trading, trading in the simulator, all that stuff. Um, I saved up to 17,000 and then I borrowed the rest, not to the bank, not to the credit card like Pastor did, but I borrowed from a cousin that's also like entrepreneurish. So it saved 17,000. He borrowed me the rest, and then you know over PDT started trading. Once I got over PDT, that didn't mean like I'm gonna go crazy and start to double this account in 1 month. It was more like no, now PDT. PDT was my baseline. PDT zero. So then I put in 25,000. Then let's say I had another $2,000 over that $25,000 mark. My account was truly $2,000, and 25,000 was just a permission for me to trade as many times as I wanted. But I didn't trade with 25,000 right away. It was just whatever amount of money was above 25,000. I was my action account and all I could risk. But in conclusion, it's going to take years and it's going to take a lot of hard work. So don't rush that process. Saving for PDT is part of it. If you can learn what you do so, then there's nothing wrong with that.
That's something just real quick. I did the same thing in terms of like just using the little buffer you have over it. So I started with like 27,000 when I first funded it, and then just that was like my buffer, and I'm like, like my risk. So
yeah, you can lose anything under 25. 25 is zero.
Yeah, and I had to switch cameras, so that's why it looks different. But my other camera died, so it is what it is.
That's okay.
Interesting for me on like the contrary of Marcelo, like I did borrow. So I have two siblings that again, one of them was credit, one of them gave me some cash, right? I believe $5,000. That's none of the stories kind of coming back. It's like 6-7 years ago, so it's hard to remember everything. But anyhows, I was more afraid of borrowing money from people than I was the bank, because I always try to assess the risk to the extreme. And I even thought before I went live, like, let me already just assume my power could go out in a trade and I come back 2 hours later, my account is at zero. Not very extreme circumstance, but I did imagine that happening. And it's like, okay, if that happens, I want to owe the bank and not somebody else, because if your relationship with people, like money and people can be a little strange, and I didn't want to have like to bag hold somebody and then have to spend a year, 2 years, 3 years of them on my back trying to pay them back the money. The bank will also be on your back, but it's in a very different way, right, in my experience. But yeah, they can move on to the next question here.
Sure.
I guess I can do this one. What's the secret? I guess that's towards me, but it can be towards everybody. I see you trade when the market's going sideways or the backside and buying those little dips. How do you keep your nerves, and is the risk to reward worth it? So, I mean, I think this takes time, just like with anything. I used to kind of stop after the first hour and not really trade backside because I'd always lose money on the backside. But over time, it has kind of developed that, once you kind of know what works best for what time of day, or if the stock's super upwards momentum, or if it's kind of more sideways, you just kind of look for more extended dips. You look for more of those low risk entries that, for me, I'm not very nervous in those because they are pretty low risk. I'm buying on usually a flush or some sort of dip, which will most likely immediately bounce in my favor, or at least those are the trades that I like the best. And I think the risk reward is worth it for me now, just because I kind of have figured out how to squeeze money out of the majority of the day, if I am going to trade all day. But then again, it depends on the day. So for a beginner, I wouldn't really worry about it. I stick to that first, hour or two, which is where the majority of the volume opportunity is. And then after that, it definitely gets more tough. But sometimes we do see those midday runners that go parabolic because, they kind of keep holding up and sideways, and you can trade that. And then maybe it'll make that second leg up.
Guys, don't forget to hit that thumbs up as you're tuning in on YouTube. I see a question there in the Discord that's asking about our favorite books. Do you guys have any quick books that you might have read that influenced you?
I actually haven't read a single trading book, to be honest.
I've read too many, but I think the best one is classic Trading in the Zone by Mark Douglas. And I also really like Trade the Trader, which is a book that's teaching you to learn how other people on the other side of the trading of the trade is thinking and how you can capitalize on their flaws, rather than looking at trading as, oh, I gotta learn about stocks and I gotta learn about charts and I gotta learn about patterns. No, it's like that book teaches you that you have to learn about the other guy trading against you, like like the short sellers and that stuff.
Yeah, so there's another question here asking how often do you guys think is good to increase share size? So like Marcel and I, we had a conversation about this before, and we refer to it as like turning a corner. So the very first corner is of course profitability and consistency, and from there, corner two is then being able to apply that share size to it to then be able to essentially make more gains. So in terms of like frequency, you want to have a bit of a balance in between being comfortable and being uncomfortable, right? Not to be contradicting there, but you want to feel good as you trade, but you also want to try and expand a little bit, right? And it doesn't have to be, hey, I'm going to go from 1,000 shares to 10,000 shares, 5,000 shares, anything crazy like that. But maybe you push it a little bit on a day where things are working well. Maybe you jump up to 1,500 shares. And so for me, I've been trying to utilize share size in areas where I have the highest probability of like doing well on a trade. So, um, if your metrics is backing you up and you're feeling good about where the market sentiment is, that could be a time where you say, okay, in these key areas, this is where I'm going to look to push the size a little bit. But yeah, other than that, you got to make sure you manage the risk and make sure that subliminally you don't alter the strategy and hold longer than you should or sell too quickly. Got to keep it the same.
Hey guys, how do you determine soak zones?
I guess I can start. Usually you'll see, like, let's just say a stock's at 350 and it keeps dipping to 340s, maybe high 330s, but you keep seeing kind of bid stack in, or you see a lot of selling pressure, but it's not really going. Maybe there's a hidden buyer. And then it'll come back up, maybe test 50 again, come back that same level. You'll still see that same type of action. That's kind of how I kind of see soak zones. Now, people that use like Crispy and some of these guys that use the ladder, they see it in a little bit of a different way from like what I've kind of just learned. And I don't know, I feel like it's easier to see some of that on the ladder. But then again, for us, we're just so used to the level two that we can still see it. It's just different. I don't know.
For me, the best way to do it is you look at the chart, you try to envision where is the most obvious place for most beginner traders to set a stop loss at. And just underneath that, that's the soak zone, because a lot of market makers, right, like doing something called stop hunting, which they flush the stock through a level of very obvious support, through a level in which a lot of beginner traders will have a stop loss at. And then just underneath that, that's when they soak shares and then run the stock back up. Whenever you see a chart and a stop level that is too good to be true, too obvious, just under that, you might consider that a soak zone.
Do you think hyper
see the
scalping
hyper-
strategy will have an end? I hate this
Not
question.
really.
Yeah,
Because
we
at
had
the end
this
of the
conversation
day,
recently.
yeah, go ahead.
Go ahead.
Our strategy is risk management. Go ahead.
We had this conversation recently, the last team house meetup, and what we determined was that ultimately stocks have to move, and stocks don't go straight up or straight down. They have to stutter and buffer and consolidate and then go down. So ultimately, if stocks are moving, it just really comes down to the volatility of it all. For the hyper scalping style, ultimately, the more volatile the stock is, the more opportunities there can be. As we're looking at the price action. But if stocks were to either move, because there's a Goldilocks zone. If stocks are to move too fast or too slow, then it could become a problem. But for that to happen, you have to get rid of all low float momentum stocks, like stuff like that just isn't going to happen, right? These companies are going to continue to progress. Ultimately, this is the United States of America, where businesses are incentivized to grow, right? Which is why they get all these benefits, right? So there's always going to be a different company with some sort of breaking news, some sort of reason for people to be looking at it, and that will lead to volume, and that will lead to some sort of momentum. So there can be changes, though. With that being said, there can be changes, whether regulatory or on the broker level. But this is a business once again, and the number one thing with business and life is that change, you have to just already accept it, right? So whatever change comes our way, we have to look forward to it as the traders to prevail. Doesn't matter if commissions come back tomorrow at $500. If there's an edge that can be there, it'll be up to us to find it and get it done.
What are you guys'
500
thoughts on the
commission.
thread? What is your guys' thoughts on the thread of AI algorithms on day trading, as they will continue to keep getting better and better? Well, we're already trading against AI and against the best algorithms ever, which is Wall Street. So I think we've been trading against algorithms all along. And for them to get so much, they're already there, right? We already found an edge around them. It would take a lot for the algorithms already market makers in Wall Street use to be topped by some sort of AI algorithms. I wouldn't be too scared of that.
No. And on the last question, I think that scalping itself has been around for a long time. I mean, there's 8-figure traders out there that started, like we are scalping, maybe not the style we are super quick, but people have always been scalping, and stocks are always going to do erratic style moves because you have, humans trading them, and humans are very emotional. So we just trade off of emotions and around those algorithms as well. But I don't know. I think it's easier to trade around them in the small caps than the large caps. So that's kind of why we're here.
I got a bit of a switch it up a little bit here as we're winding it down. This one is for the boys. How did you guys spend the weekend? How does an average weekend look for Marcelo, for Tim, for Triad? How does an average weekend look? What did you guys spend your time doing? Nobody?
Usually just reviewing my live trading videos. I usually am reviewing that for the whole week, not just Friday. I'm reviewing from Monday I usually break it up to where it's Monday and Tuesday. On Saturday I review, and then Sunday I do Wednesday, Thursday, Friday, and I just review my live recording, and then also go through my statistics as well.
I'll go next. My weekend used to be a little bit more studying than it is now. I like to definitely decompress from the markets. This weekend I was watching UFC fights last night with some friends, so that was fun. For me, usually it's just working out and freaking trading. I don't know. There's not a whole lot. Getting my office set up too, and my my garage. So
Yeah, usually for me as well, is either something regarding MMU. This weekend, we were helping a lot Triad to get set up with this new course and all that stuff. But in general, what I really like doing is going on hikes. I like hiking, going to nature a little bit so that I can meditate meditate on the craziness that my life is now. Be like, what the fuck, just made 40 grand last week, and I take it in and then I come back and keep doing. That's my weekend.
Yeah, definitely, man. For me, I like going out and trying different food spots. But this weekend was definitely a busier weekend, being that we were off for the team house weekend. So a lot of administrative work. Pastor was dialing in, getting it done, catching up on all the messages in the Discord, stuff like that. Just back end work. But yeah, the weekends are always a good time to detach. I know this question did come up earlier. It's always a good time to detach, have some fun. Maybe do some just some sort of hobby, right? Some of you guys are doing things around the yard, around the house, different projects like that. Tim just mentioned, getting set up, getting his office set up in the garage. These type of things are for me some of the best ways to spend the weekend. Sometimes also doing something a little different, right? But yeah, we've been going for now an hour, and I believe what is it, an hour and some change here, so an hour and 24 minutes. So we can definitely maybe start closing it down. If there's any closing questions and maybe any points that the guys might want to touch on. But yeah.
What is in one sentence, what is your game plan for next week's trading?
Take it one day at a time. I don't know. I have no expectations. That's probably better. No expectations.
Yeah, usually for me, I just assess the momentum as it comes. I've been definitely getting a lot better than that at that. Just yeah, not going in too heavy into a market where it's actually there's not much momentum. Because like recently, the past couple of weeks, it's been like hot, and then like another day is like nothing, and it's like cold, and then it's hot again. So I don't want to like get into an expectation where okay, it was hot yesterday, so tomorrow that means that I have to go 10x size, and then tomorrow comes and there's nothing going on, and then I oversize into a crap setup, and then end up losing. So kind of just taking the momentum as it comes, and if something hot starts to turn up, and in that moment, then press the buy button with some size.
5K size. 5K size.
And the bills have been paid. As you guys know, we have our memes and our inside jokes in our community, right? And Tim is famous for saying 5K size. But for me, just to be reactive, right? Be reactive. A lot of what Triad is saying, like we might not know what the momentum might offer, but as long as we're prepared for anything, whether hot, cold, or in between, we'll do well. We just have to be willing to adjust quickly and take all the right key trades, manage risk. Okay, so as I don't know if Marcelo's gonna go, but yeah, so I guess we can start the closing statements here. I did post the guys' channels a couple of times. Once again, big shout out, big welcome to Triad for jumping on board. It's great to have you a part of the community. It's great to have you a part of the team, guys. We have a lot of big things planned. Stay tuned throughout this year. There's gonna be some epic things. Ultimately our goal is to be the #1 community out there on the platform, not even just in the trading space. Forget the trading space. We want to be the #1 community in the entirety of YouTube. So we're gonna push hard. We're gonna be aggressive, and just like with trading, we're gonna be disciplined. We're gonna do our research, and we're gonna keep pushing forward. So once again, all the guys here, Triad, Tim, Marcelo, I'll post their channels once again. And with that being said, I want you guys to remember our disclaimer, right? Remember that day trading ultimately is a business, and day trading is risky business, right? They say in the States, 8 out of 10 small businesses fail within the first 3 years. And not only that, they say 9 out of 10 day traders fail within the first, well, there's no really timestamp, but they say 9 out of 10 day traders fail. So all of that is not to scare you, but to be transparent with you and let you guys know that what we're doing here is very difficult. So no matter how it might look, when you're watching us, just understand that it's something that takes time. Months, more commonly years. And so you have to pace yourself. It's not about it being a sprint and it being right away, but remember, slowest is the fastest way, right? Do not skip steps, do not jump the corners, go through it slowly. For those of you who are a part of our community here in terms of merciless markets, we recommend the simulators always. We always want you guys to start slow, start small. If you're in a real account, it has to be small size. All right, take the necessary steps. Remember the live streams that we're doing here. This is never financial advice. We're not financial advisors. We're not tax professionals. You have to consult with a professional if you're looking to make some sort of big decision for yourself that's along this line, right? So keep that in mind. And lastly, remember that none of us here will ever message you first. There has been fake accounts that's popped up in the community on all social medias, TikTok, Instagram, all that stuff, Discord. We will never message you first. We will never try to just ask for personal information or money. And we do not do copy trading. We do not do mirror trading. And be careful with that stuff, man. A lot of fake people out there in this community. Again, we're striving to be the best. We want to be transparent with you guys, which is why we say this. We do not guarantee success even for our students, right? You can't guarantee it because that's how hard trading is. Trading is the most difficult thing that I've had to learn how to do and that I continue to do on a daily basis. So keep that in mind. It's not to scare you, but just to be honest, just to be upfront. As you guys know, we are the most transparent traders that there ever was, right? So, KB, Mighty's name is popping up. KB, Crystal Ball, Treasure Hunt, AP, George, and so forth, guys. We'll catch you next time.
Yep.
Stay safe.
And we're all verified on Kinfo if, you know, any of you are like, oh, they're frauds. Kinfo. So
I'm also on Kimpo as well. You guys can check me out there as well.
I'll have to create a Kinfo account. I actually never did. But yeah, if you guys want me to create a Kinfo account, I can. But I don't think anybody has any doubts about the caster at this point.
No.
But yeah, stay safe, stay green, bright and early again tomorrow at 9:15 a.m. See you guys.